Hello everyone. Texas Instruments may be one of the first real proofs that AI demand is spreading into analog and power-related chips, not just GPUs. That is what this quarter may have revealed. Texas Instruments is not a headline AI name. It is a company tied more to analog chips, power management, and the supporting layer that helps real systems run. And that is exactly why this matters. TI reported first-quarter revenue of $493 billion, above expectations, and guided second-quarter revenue to $5.0 billion to $5.4 billion, also ahead of Wall Street estimates. More importantly, the company said its data center business grew about 90% year over year. After that, the stock jumped more than 10%. This is not just a strong quarter. It may be one of the clearest signs yet that the market is starting to reprice AI demand deeper into the semiconductor stack. For a long time, the clean AI trade was obvious. Buy the companies closest to training, acceleration, and core compute. But that logic was always incomplete, because if data centers keep scaling, then demand does not stop at GPUs. It spreads into the chips that help power, control, stabilize, and connect real systems at scale. That is where Texas Instruments starts to matter. So the real interpretation here is not that TI suddenly became an AI glamour stock. It is narrower than that. TI may be showing the market what the next physical layer of AI demand looks like. And that is important because it changes the winner list. It suggests AI money may no longer be staying only with the most obvious front-end winners. It may now be reaching the supporting chip layer underneath them. There is another reason this story matters. This was not only about AI. TI also benefited from improving industrial and automotive demand as customers began restocking inventory. That matters because it keeps us from making the lazy conclusion. This is not a case where every dollar of upside suddenly comes from AI, and it does not mean TI is replacing Nvidia or the core GPU names. The better interpretation is this. AI may be giving the market a reason to reprice a company that was already stabilizing, while also proving that demand is spreading into a less obvious but very real part of the hardware stack. That is a much stronger signal than simply calling TI an AI stock. Because the real question is not whether Texas Instruments is the next Nvidia. It is whether TI is one of the first names proving that AI demand is starting to show up in analog and power-related semiconductors, and that may be the more valuable signal for investors. Because once the market starts pricing that shift, the AI trade becomes broader, more physical, and harder to reduce to one category of chips. So the takeaway is simple. Texas Instruments may not be the headline AI winner, but it could be one of the clearest proofs that AI demand is spreading beyond the obvious names.